Today we're going to be talking about planning your trade. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. It's Monday, it's the beginning of the week. We had some big moves last week. We had some very simple textbook trade setups. I know we're going to get more of those this week. Today we're going to be reviewing basic system. We're going to just go again, crystallize some simple concepts. We're going to talk about planning your trade each session. I'm going to answer some questions that have come up frequently over the last couple weeks. We're going to go into depth just about each day, having a plan when you go to the screen. If you don't have a plan, you don't have a trade, as a lot of traders will tell you. But also not having a plan to trade the moves in the market, but having a thesis and then having a plan around that thesis, if this then that, or if this then that, for an opposite scenario. So today, let's get back into it. Hopefully everybody had a great week last week, but also a great weekend. Let's talk about some simple things. Planning your trade each session. So I talk about myself, I really try to stick religiously to keeping my window of trading very specific. There's a reason why. That 3-hour window typically will establish the high and low, or a high or a low, for potentially not only the session but often the day. So when we understand that, the next thing that I look for each and every session is a retest of one of the extremes. We talk about some simple concepts, understanding about where the money is. And when I say where the money is, we're going to just review that again. Some questions again regarding that have come up. We're going to look at some specific examples. We're going to review last week's British pound for the entire week for each session. And we're going to talk about how that preparation sets you up potentially for trades if they presented, and also with gold. So if I have a high of the day sell high thesis, I'm looking for a stop hunt high scenario or a peak formation scenario. So if the market is already pushing out to new highs, I want to know, are we having a pullback into an existing trend? So we could be trending down, but the market is moving 50, possibly 75 pips back up in the other direction. But again, the timing window is critical for me. That first hour could potentially extend that peak formation high, and even into that second hour, the equities hour, as we head into the London or the New York Open, we may even extend that another 15 to 30 minutes before we get to a possible peak formation. Most likely we'll be at or near round numbers, specifically double zeros and 50s, but in some occasions these peak formations will extend out to a quarter level because they're trapping volume up high in that upper quarter, and the opposite for down low in a lower quarter if they're moving in a 50 pip box or a double zero 100 pip box. The pound and gold love double zeros. So if my thesis that I'm looking for a sell high setup, we could also be looking at a scenario where the market has given us a trade possibly in the previous session. So if this was the previous session, this could be Asia, this could be yesterday's New York session, this could be London heading into New York. We talk about how I avoid that window in between, and I wait for at least till that hour prior to the 12 candle window to even start looking at it, because I know in that hour prior, in a large percentage of trading days, they will all of a sudden move back either up to the high or down to the low. Now if the market is retesting a low, we could be waiting for them to take out the low of the day, but they may only be taking out the last profitable trade before they start to reverse that market. So traders are waiting for that low of the day to be taken out, but they may only be going back to the most recent leg where that profitable move started up to. So it's important to understand, again, the timing window. So if I'm looking at that first hour and they've come down 1, 2, 3, the second hour opens up, pulls back a second time, and then they engulf it with a pin hammer, I'm looking for that long trade now back up to the top scenario where there's a profitable trade sitting from either London, New York, or whatever from the beginning of the session. And again, they may just take that rate out. We might be in a 50 pip box. But it's important to understand planning that when they come down, if they come down low and they're working the low, well, I'm looking for a buy setup. If they stop hunted back up to the high at the beginning of that session, and there's a pin that goes through the high, we could be looking at a sell high setup. If it's a trend trade, what we will most likely see is that in that gap time, the market comes back up towards the high or the low, and then in the pre-market, that first hour of our 12 candle window, they start to break out. They pull back, and London will continue the move. Trend trades will break out and layer on top or layer underneath and continue the move. A stop hunt, typically, if we don't see it in that first hour, we can expect it in that second hour. Meaning, if there's just sideways consolidation and there's not been a stop hunt already occur, we can expect it in that second hour. So again, coming back to planning my trade. If I'm thinking that we're looking for a buy signal, the market breaks out right away early. We get in long and all of a sudden they come down 1, 2, 3, 25 to 50 pips and hit stops at the low of the day before they engulf it and resume the original uptrend. I'm caught up high. They put 25, maybe 50 pips into me. I get stopped out, and then I'm afraid to get back in and get in with the trade now that it's going long. So false move at the beginning, then the stop hunt, and then the trade. These are the scenarios that you want to be planning out each and every session once you've established where your high and low are for the day and understanding, am I looking for a buy low signal for a long trade? Am I looking for a sell high signal for a short trade? And also how they might entice you in early as the first mouse. And we know that the second mouse gets the cheese. So if you've been following me long enough and you've been trading these pairs long enough, you know that these electronic market makers, the algos, whatever that are driving this market, they're very good. They have every single mathematical type of equation programmed into high frequency, which is why we work off the high and the low. The smart money works from the extremes, but they're very good at enticing us with a lot of false moves inside, getting us to chase that fast price action. It looks like it's running away. This trend is going to roll over. We're going to get a measured move. We can't stand it. We get in, and all of a sudden, the next candle reverses, most likely in that middle hour, for the reversal back in the other direction. So again, I write everything out. I've got a couple of scenarios, and I'm very, very meticulous about paying attention to the clock and the high and the low, because I don't really want to do anything until they go to the high and the low. They will put in a couple of peak formations just prior to the market opening and give you a couple lower highs or higher lows, and looks like it's already starting to move. You get in and they come back one more time to hit all the stops, usually at least 25 pips or so below or above that range before they put in a peak formation for the reversal. So when you have this written out and you know the scenarios that you're looking for, I will often put, okay, if I think the market's going up, I'll put my thesis on there, but then I'll look at, well, what if they go up first and then go down, but then they don't come back up? What would I be looking for? So I throw a couple of curveballs, because inevitably 75% of the time the market does something completely different to what I expect. So it's important to be prepared, to be still being focused on where's the high and where's the low. If they go 25 pips further than what I expect, are they going higher? Are they going lower? If they go lower, if they've gone 50 pips now instead of 25, how far am I away from the other side of the range? Am I 75 pips, 125 pips? And these are the types of scenarios when the timing window kicks in. Are we looking now just at a stop hunt back into a trend for a continuation move? Or are we looking at putting a peak formation bottom or top in place for a trade back in the other direction that will potentially go all the way back to the other side of the trading range. 99% of the time, these markets will test both sides before the session, the full day is over. And so it's important, especially with gold, because gold has a tendency to make some very large moves, and it's important to make sure that we're trading with the underlying direction of that trend. So again, writing that plan out, having my timing window is very specific, because if there's a peak formation in place prior to the 12 candle window, then I will always expect still a stop hunt potentially back into the peak formation, not necessarily to the extreme itself, but back into the peak formation, because that traps traders chasing the trend, what they believe is the trend, because the market has gone down. Now that's different than a market that maybe spikes down and then comes back with a creeper and rolls over for a measured move or a retest of that higher low. So again, high of day, sell high setup. What is your thesis? If you think the market's moving higher throughout the session as we head into that 12 candle window, what would a sell high setup look for you? Or do they go up 25 pips and then come down 1, 2, 3, because now we're going to get possibly a trend trade or a retest of the high and then a trade in the opposite direction? Low of the day setup or a trend trade. So again, as I said, sometimes these stop hunts don't have to take out the overall extreme. They'll stop hunt back into a trade, a profitable trade that's off the low or the high. Or they will come down and take out the high or the low, just pinning it enough to hit stops and engulf it in that first hour before revisiting the other extreme. So run those scenarios each and every session. Again, we're going to review last week's pound setups, going into a session, looking at the previous session's highs and lows and making a thesis and looking how that market played out as it opened up and what trade possibilities presented to us. Now, just answering a couple of questions. So again, journaling and written plans. So I have a written plan, but I have a playbook. I archive and screenshot all of my trades as well as previous trade setups, again just based around the high and low and the different variations that I can expect to see, because inevitably you're going to see the same stuff over and over again in terms of high and low stop hunts and timings in that 12 candle window and some of the variations that they will throw at you. Playbook your trades, but then performance review. Go back after you've traded a session and break it down from looking back now. What did you see? How did that play out according to not only the clock, the timing cycles, the 15-minute? Was it a false move on the first candle, an engulfment on the second, and a 1, 2, 3? Or did they consolidate and break out in the equities hour? Was it a stop hunt? Was it a trend trade? What would have allowed you to process that information better in live time? Working backwards into the setup. Where were your levels? What was your thesis? What would have changed that thesis in terms of the price action to have gotten you into that trade sooner? What could you have done to squeeze more out of that winning trade? If you missed the trade, why did you miss that trade? Were you thinking about time, or were you just watching price and with a bunch of indicators and following those moves? Again, I talk about clearing the rubbish off your charts and working backwards and studying every little nuance about the movement of these price candles around the timing windows at the high and the low of the day. Chat rooms. So a lot of questions about setting up chat rooms, live trading. I'm going to tell you what I think about chat rooms. I think if you want a chat room, I think that you're going to really struggle to ever get consistent with your trading. I think if you're serious about trading, you'll shut everything off while you're at the screen, at least for 1 hour, and watch what's happening and watch how you're behaving and processing information in live time. If you can't see where the high and the low are, and then watch the clock and watch how price behaves, it's really important that if you think you're going to get that from a chat room, that's like going and watching a professional golfer and watching him putt on different greens and assuming that you're going to be able to do the same. You need to get the club in your hand, and you need to be able to make decisions in live time. Start with your demo account. Start with one micro lot. Trade that micro lot one trade, just take one trade in one session and figure out, what did you do well? What could you have done better? If somebody showed you where that bar was, you might have got it today, but tomorrow that putting green is going to be a different hole. It's going to be a different wind conditions. It's going to have a different lie. You're going to be feeling different. You're not going to maybe be in the same rhythm. Maybe you didn't prepare properly on the day. There are so many variations that each and every individual trader will bring to the screen. Chatting about stuff, I think I'll be honest, I think it's a waste of time. I don't have anything on when I'm at the screen. Everything is shut off. I have a bit of classical music playing in the background, but I'm completely zoned in on the screen for that window of time. Everything is shut off, including my phone. That's me. Other traders, maybe they like to interact and chat and talk about setups. To me, I don't think that that's a valuable tool for you developing your own individual trading skills. Some people might disagree with that. That's my belief. If you're out there hitting balls every day, or you're trading on the screen every day, you will learn something if you're serious and you gain your playbooking your trades, you're journaling them, and you're reviewing your performance, your whole entire process. So I talk about this in the 7-step daily routine for high performance traders, creating the habits and the rituals that will move you forward every single day at least 1% in a direction of constant progress. You're going to make mistakes. You're going to take poor quality trades. You're going to over leverage. You're going to get stopped out. You're going to hold on to losers. You're going to do things that are going to cause you to lose money. And so the only person though that can fix that is yourself. And you'll either go through a painful ritual over and over again enough times that you'll either decide to fix it or you'll quit. So I'm very meticulous about being detailed about all the steps that you need to do yourself, that I needed to do myself, in order to reprogram myself for success rather than creating the same routine of failure over and over again. Timings, again, a lot of questions about timings. The I sessions indicator is down in the window below. It's set it. Mine are set for these times for New York time. So my time on the candles, I believe. If your charts are Greenwich Meridian time, just look at whatever time it is right now, Google it, and then set it in your iSessions. There's a lot of confusion. I just downloaded the indicator and I set the clock according to New York time in terms of my candles. So if it's a 9 o'clock candle on my chart for 3 a.m. or 2 a.m., then that's when my New York window 2 a.m. or London window at 2 a.m. starts. Just wherever you're at, Google what time it is, and then figure out your candle time on your chart, what time it is right now in New York, and then program your iSessions indicator from there. I don't know, I'm confused about why that's complicated. I'm not sure. I know that people have different chart times, but wherever you're at, just Google what time it is in New York at 8 o'clock, and then if you're in Central Africa, or if you're in Ireland, or if you're in Sweden or Holland or somewhere, then just set your iSessions indicator according to that time, obviously where you're at for New York, London, and Asia. Now, so going back to where the last profitable trades are. So the money is always going to be at the high and the low, regardless. There's stops at the high and the low, always. So coming back to that point, where is the money? I go and look at each session and I look at where would the last trade have been from that last session. So if it's a short trade coming into the New York close and they haven't stopped it out in Asia, is that trader still in the money? Are they working the low heading into the Europe Open? Because maybe there's a trade set up here. They've put in a peak formation. They've got people shorting the market, and they're going to explode up and do a measured move to get stops not only for that day, that session, but from the previous night's short trade as well. So just little scenarios, planning that trade. What I want to do is I want to see peak formations for selling high, peak formations for might get a lower M structure in there or a lower W structure, or we might have a 50 pip move where the market goes into a 25 pip consolidation and they come down, as we saw last week on the pound, 1, 2, 3 engulfment, and a 50 pip move straight up. We talked about creeping trends, coiled markets. When they move, they explode, and these trades will go 50. We saw a 100 pip move on gold Friday night. They don't come back. They're over in an hour and a bit, in some cases faster, but generally speaking, they're zero stress trades. And I like to look for something in that first couple hours. Don't always get that, but those are the trade setups that I'm looking for. I want to see a stop hunt, a trap, and a trade. So sometimes, like London on Friday on gold, they went 50 pips down, they came right back up. So traders who were looking for something in that session, it was already done. They went sideways for the next 6 hours. So little things to recognize. We had a day zero on Thursday. That trade exploded in the New York session right at the equities hour open. They made a pin hammer on the last candle of the first hour. That was the third stop hunt inside of that peak formation from London, and it went straight up 100 pips. So coiled markets explode. They move fast. Again, just understanding, are there pins down low? Are there pins up high? If there's pins there, then maybe their work is done. As we head into the equity hour open, do they go back one more time, or sorry, into the 12 candle window? Do they go back one more time into the high or into the low? Is it a 1, 2, 3? Is there a pin there? Or is it a breakout, pullback, trend trade? So hopefully you got some value out of today's video, traders. Plan your trades. Go over both scenarios. The one you think might happen, and then a completely opposite scenario that if it throws you a curveball, at least you're prepared, and then you can assess the information in live time. Again, coming back to the chat room thing, you need to be able to process things in your own live time. So that's why back testing, all these types of scenarios are effectively useless. Only you can back test what you're going to do in live time. Chatting about it means that you're actually going to not be able to reproduce that when the chat room's gone. If you don't have your putter, you can't go putting on the putting green. You can watch people putt, but you can't putt yourself. So make notes, pay attention to the clock, understand exactly what you're looking for, and then in live time, monitor how you're processing that information. What happened in the first 15 minutes? Have they hit the stops, or did they pulse the price? Did you chase a breakout? Or did you see the breakout and it's a trap? What do you need to see then if you're going the other direction? What should the market present you with? Does it scream away without you and you think you've missed the trade? If the market pulls away and moves 25 pips, 25 to 50 pips right away and takes off, and you're faced with the decision of chasing a trade, has it come out of a coiled market with 3 pushes? Or is it just a 1-bar move? So that could be the last stop hunt. You might get a trade off the low of the day. It might be a trade off the high of the day into the next session. Just because the market moves doesn't mean that you have to trade it. That's a really important thing to understand. The trade setups that show up at the high and the low of the day are very specific, and they're very easy to spot. So if you're looking for something and you feel like you've missed that trade, that can be frustrating. But you also need to train yourself to not get caught into chasing those moves, because often when you chase the move, those are the moves that they end up compressing and then coming back very quickly, and all of a sudden you're caught in negative equity. You're caught down low or you're caught up high, and they don't go back. They don't let you out of that trade. So process things, make notes, figure out what you need to do in live time. Don't worry about what other people are doing or chatting about, or where their other setups are, or how many pips they got, or anything else, because that's not going to help you get better tomorrow or tonight or next session or whatever that may be. Every session's the same. Where's the high? Where's the low? Are they working the low? Are they working the high? Was there a profitable trade in the last session? So are they going to go back down? Are they giving me a setup to come back down and get that trader who's long off the bottom or who's short off the top? What do I need to see? What time should it happen at? That first hour will often take traders in the wrong direction. They'll hit a stop, they'll hit stops. The equities hour either maybe extends that and then locks it in and reverses. And in some cases, we'll see a 3-hour setup where they do 3 pushes over that 3 hours, and they coil that market for a squeeze, and it explodes for 50, maybe 100 pips in the other direction. So keep it simple. Let's look at last week's trades, but again, reviewing it from the previous session heading into the next one, having a thesis of what we need to see and is it tradable. What do we need to see to be tradable? Have a great trading session, and may the markets go with you.
Good day, traders. Stacey Burke from Stacey Burke Trading, continuing our discussion on planning your trade each session. We're looking at the British pound. We'll just go back through the week and we'll look at just how prepping each session helps us have a thesis about looking for sell high setups or buy low setups or trend trades. We see the market open up on Monday, and again, I don't typically trade or recommend trading the pound in Asia. It's just not normally a large range session. It can offer some trades, typically maybe on a Friday if we've had big moves in the week, but generally speaking, the Asian range tends to be sort of a fairly consolidated 25 or less pips. But we have a low of the day put in place, and the market immediately goes up in the rollover time prior to the Asian session before extending slightly higher above the quarter level, taking out the previous day's high. Then goes into consolidation before pulling back inside. We see traders shorting this. We talked about this last week, perceiving that to be possibly the M formation at the high of the day. But the market pulls back inside, so we talk about, again, making a box. It's put a low of the day in place. This gap on the rollover is the same as a bear candle spike coming down. They come back through, so our low of the day is in place. They come up and pull it back inside in the extended 3-hour window. So we have a high of the day in place. So our thesis is that, well, my thesis is that I don't do anything until they go to the high or to the low, because I want to know, this pin to me represents that they've gone up there and traders who are short have been stopped out. Traders shorted the market, didn't quite get down to the 25 pip mark before it reversed in that first hour and gave us a W formation. So again, a variation of a W formation that ended a move in 1 push, 2 pushes, 3 pushes, an engulfment, and a stop hunt to the high of the day. So again, understanding that if you were to buy this, you're buying up high. There's the high of the box. We have a box. We want to sell high and buy low. They're getting you to buy high. You buy high, it pins through the high, that's a stop hunt, before reversing and engulfing. And now you'll notice that traders that chase the W are also caught in negative equity at this point, which is why, although they pinned up inside of traders who were short, they won't stay up there very long, because it allows this trader and the other traders to get out of the market, potentially either without a loss or at break even. So they pull back and immediately move back down towards the low of the day. So they get traders going long in the upper portion of that box. Pin 1, 2, 3 to the high, pin to the high, engulfment, doji pin underneath of that peak formation, and then the fast stop hunt to the low of the day. 1, 2, 3, 4 bars basically. So an hour 15 for a 50 pip stop hunt to the low of the day. The market then pulls back inside and pins up into traders that are short. So again, as we come to our next 12 candle window in the US session, we have our our low, and we have our high. And lo and behold, nothing happens. So some traders may have saw the pin to the high in the equity hour and then shorted this market, which, if that was the case, again, you'll notice you're getting filled inside of a high and a low. The high is up here, so we would want to see a pin up through the high for a short trade back down to the low. But this trade has gotten traders inside without hitting either the high or the low, because we got traders that are short and we've got traders that are long off the low of the day. And neither one of those at this stage has had a stop hunt through the lows or the highs. So again, if the stops, the stop losses, the breakout orders, the take profit orders, whatever they may be, if they're existing at the periphery on the extremes, neither one of those has been hit, which again leads us into our next session the next day. We see immediately the market skyrocket through, hitting stops, but also getting traders who were short in that Europe-London 12 candle 50 pip stop hunt. So again, right off the bat, we have stops that are hit. The market then comes back inside and is a creeping trend down into the Asian 12 candle window. So we have our high of the day in place. So the market has taken out stops for pulling back, comes down and gives us a peak formation low. in the Asian session. So again, no trade setups in Asia. But we have a high and a low. We have a high of the day and a low of the day that it was put in place as we head into our Europe-London 12-candle window. The Asian session gives us a lower high inside of the peak formation. The market creeps down just prior to our Europe 12-candle window. They take traders up right away on that first candle. Traders chase that move thinking this is going to be a continuation, that fast, large, engulfing candle. Again, taking you to the high of the Asian range. If this is our Asian box, they take you right to the top of the box, getting you to buy high before reversing fast and doing a 1, 2, 3, pinning traders who were long on the initial stop hunt trade back to the high of the previous day's session, and then engulfing. So again, working from the extremes. What am I looking for? What would I like to see for this to give me a trade setup? Well, I need to see a stop hunt either through the high or through the low with a reversal trade. We're going long. We want to see an engulfment. We don't need to see an engulfment pin hammer on a 1, 2, 3 when the market is making new highs. We want to see a stop hunt trend continuation. If this market broke out to the high first and that came down over the 3 hours, we might want to see a second leg for a reversal, but we see the initial stop hunt that breaks outside of our box, a 1, 2, 3 engulfment into the equities opening candle. A 1-bar stop, an asymmetrical risk reward for a 50 pip stop hunt or 50 pip trend continuation back to the high. And again, heading into our US session 12 candle window, the market pulls back. So now we have a high of the day scenario. Our low of the day is down underneath the low of the day. We have a swing low from the retest of the breakout pullback, and the market creeps down before pulling back, drops down again for a second leg in the US session. Again, nothing going through the high of the day, but we have now pins forming through the low, but we're in a creeping trend back down. Again, no short or long trade setups, just creeping trends. Eventually we get a second leg engulfment that takes out a middle structure. So we have two-sided trading. So now we have our low and our high in place. We get a second lower high into the new day. The market takes out our lower high. We have a higher low, and then our lower high is taken out into the rollover time. So now we have a new high of the day as the market heads into Asia. So again, we're heading into Asia. Here's our high, and here's our new low that's made at the beginning of the day. The market comes back inside, so now we have a new high of the day. Into our 12 candle window, we get a move down before it pulls back, and then a second retest of the low. So now we have a double bottom structure that we can trade off of. Although again, I don't trade the pound in Asia, but we now are in a market that has given us a low of the day structure formation for a long trade back through the high of the day. In our gap time, the market drops down, stop hunting back into the breakout pullback before continuing and breaks out in our second 12 candle window. So our first candle now, again, understanding how to trade a trend. If we're in a swing with a higher low and a breakout pullback, our first candle, the break of our first candle can be an entry. Excuse me. That's a 1-bar stop. And again, minimum thesis is a measured move of our swing low high. So we want to see at least one full expansion. In this case, it was almost 2 full expansions. But we see the breakout of this 1 bar to continue our long trade, breakout pullback continuation. So again, this is day 3. So day 2, stop hunt low, made higher highs. Day 3, creeping inside as a consolidation, breakout pullback, continuing our higher highs. Day 3, level 3. So the market breaks out, pulls back at the quarter level, and continues in 3 pushes before putting in a pin hammer peak formation. So again, just recognizing that this potentially may be a new high of the day, the market then closes below our high bull structure for an engulfment. So this pin by itself, but in the combination of the two bull pins on the third leg, can now form our high bull structure. We get 3 pushes at the high, 1 push, 2 push, 3 pushes, and the engulfment. And this is critical because you're going to see this again and again. We see 3 pushes down headed into the U.S. session before they continue that move back up through the high of the day. So again, our thesis, working from the high and the low, we have a high of the day in place, but now we want to see a second leg structure in order for us to have a low of the day put in place. Our first hour takes us down to the new redrawn low of the day before engulfing, and then a third smaller retest that's weak, and then a reversal candle in our equities hour, second candle. Again, if it's not a full engulfment, but they break the high, there's your 1 bar stop for a move back through the high of the day. Now this market failed to follow through for a measured move, which again on day 3, level 3, potentially now be putting a peak formation in place. We get a 3 little bears peak formation structure in place. They engulf, pull back, and then drop down lower. Again, putting that peak formation in place and then retesting the low of the U.S. session. So again, our prior window, we want to see buy low setups in a long situation, or sell high setups if we're shorting this market. But again, we talk about if we're shorting this market and it's trying to go in one direction, the question we ask is how well of a job is it doing? And then into our next window, have we been working the low and not going anywhere? 3 hours and it's only gone 25 pips. There's our squeeze for the retest of the long move in the opposite direction. Market immediately drops in the rollover time before putting a low of the day peak formation in place at the beginning of the session. Gives us a peak formation high in Asia. So again, we come into our Europe-London 12 candle window. We have a high of the day. We have a low of the day. There at the high with a 1, 2, 3, pinning the high, sideways, bear pin engulfment on the third candle at the high. That's a trade. They're at the high. They've done the stop hunt. We have our sell high scenario. What do we need to see at the high? I look for a 1, 2, 3, sideways, and an engulfment. Does it have to happen in 3 candles? No. Can it happen in 2? Yes. Do we look for something where there's a pin hammer after confirming that's been locked in? Absolutely. The market drops down not quite 50 pips before pulling back, hits it a second time, pulls back, hits it a third time at the end of the 12 candle window, still hasn't gone any lower, and then eventually we get our engulfment, not only of the low bear, but of the first 2 candles of the fourth hour. This 3-bar reversal is a 1-hour pin bar once it breaks the high of this candle and explodes through the high. Again, creeping trend, 1 push, 2 push, 3 pushes, coiled market, explosive stop hunt back through the high of the day. Who's in the money? This guy. So again, our trade thesis, heading in, I want to look for a sell high setup. The market's already broken yesterday's low of the day. We're in a downward moving market. We want a sell high setup. Creeping trend, 1, 2, 3 to the high engulfment pin hammer. We're looking for maybe a measured move. Do we get it? No, but we get a 1.5 extension where it ends on 3 pushes before exploding back up through the high of the day. Heading into our U.S. session, we have a high of the day. We have a low of the day. We get an engulfment of the high structure heading into the U.S. session. We're not quite there yet. What are we looking for? We're looking for something now to continue that move from the peak formation. So I'm in a sell setup. I get a 1, 2 inside bar reversal. I could easily trade the break of the bull candle. I can trade the break of the bear candle. I can do anything, and I've got a 1-bar stop at the high at this point of the session inside of a peak formation, with my thesis being we're trading back through to the low of the day. Where could this trade fail? It could fail at the round numbers. It could fail at the low of the day. What do I need to see for that price action to make me want to take that money off the market if it hasn't hit its 50 pip target? Well, we see 2 pins, consolidation, 30 minutes at the low of the day without following through. I'm out of the trade. We're at the end of the equities hour as this second candle pins through, third candle. So we could potentially see them still explode back up, which they did to hit our stops. High of the day, low of the day. Same thing. Next day we look at Asia. Again, I don't trade Asia, but I still, where's the high and where's the low? Heading into our 12 candle window. They're working the high. That's called working the high. They're going up into the high. 1 push, 2 pushes, engulfment, bear pin hammer on a 1, 2, 3. 3 candles after the second push, we get an engulfment, bear pin hammer, then the little inside bull candle that's the last grab at the cash. If you're not already in this market at the previous day's high, at the bear pin hammer, you could short the bull candle, you could short the second bear pin, but again, you're getting filled inside. We want to get as filled as close as possible. When we are looking at a high of the day setup, we're looking for something that's giving us a fill somewhere up here. Again, as soon as it breaks this big bull candle, I would be at break even, because again, that it's possible it could pin up there, but once it's broken through there, if this market's going to move fast after 3 pushes and a 33 to the peak, this should come back very quickly. And you'll notice again, they did not go to the low of the day, even the other low inside of that, but they did go to the low of the Asian swing low from the session at the numbers. An example of where traders are waiting for them to go all the way down through here. Second candle that consolidates at the low of the day, again at the numbers at 50, very significant, 50s and double zeros. I'd be taking that off the table. We head into the U.S. session. Where's our high? Where's our low? What do we need to see to get in the market? I want to see one of these levels broken. Okay, again, another example. It doesn't have to be the low of the day, not even the low of that session, because in the gap time, they came in and put a new low of the day in place. 1, 2, 3 back up. It's a stop hunt into traders that shorted this. Now we redraw our lows and highs. We come into our U.S. session 12 candle window. 1, 2, 3 reversal, bull candle engulfment, 3-bar reversal. And again, I'm not saying that every single one of these is tradable, but if you're going to be in the market, you want to either be in after they've hit the extreme for the move back to the other side. You want to be trading in the right direction. So traders are looking to short this and it doesn't happen. It keeps going, or they're short up here and they can't understand why it's going back to the high, because this is clearly a downtrend now that they've rolled it over, only to be caught in the stop hunt back through the high of the day. So here we are today. We've broken out of Friday's high. We've moved up 50 pips. They're pulling it back inside. We may see a stop hunt to the high of the day for a move back down, or we may see a stop hunt down through the low of the day for a move back up and continuing our long trend. So again, this market has been making new highs. We're broke out early into the session. There's not yet a peak formation in place. We could see this market continue to extend higher before coming down. So putting a peak formation possibly up top before a sell setup, or we may see the market come back down and continue with a trend trade, or a 1, 2, 3 back down to the low for a continuation long. We'll watch and see what happens as we head into our 12 candle window. But there's our high. We have a low of the day, but we also have the breakout high, which could act as support. It all depends on how this price action behaves over the next few hours. Hopefully you got some value from today's video, traders. Work from the highs and lows. Keep it simple. Have a trade plan each and every session. Wait for the stops to get hit, or evidence that the market has gone to one of those extremes and is done doing business. Again, notice the difference between a breakout versus a stop hunt and a pullback. Very different. Market will usually pin or hit a level and reverse quickly, as opposed to breaking out and going into consolidation and reversing. Keep it simple, traders. Have a great trading session. Plan your trades. Have a great trading day, and may the markets go with you.
Hi, traders. It's Stacey Burke from Stacey Burke Trading.
If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.